Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is Morning Forex Technical Report for April 28, 2023. I'm going to take a look at some of the major currency pairs. The yen is moving to the downside after the Bank of Japan interest rate decision, so we'll take a close look at that. We'll also take a close look at the euro versus US dollar. Let's start with the euro versus US dollar. We had core PCE data and PCE data come out a little bit mixed. The core PCE came in at 0.3%, but the year-on-year was a little bit higher at 4.6%. The prior month was revised higher as well to 4.7%. They were expecting 4.5% this month. The headline number came in at 0.1%, which is a little bit just nice to see. The year-on-year moved down to 4.2% from 5.1% last month. That is good as well, but it's a core in the service sector that the Fed is watching. We have the Federal Reserve rate decision coming next week on Wednesday. Employment cost benefits costs for the first quarter rose by 1.2%, unchanged, actually up from 1.1% in the prior quarter. They're expecting 1.1%. We're seeing stocks move lower, interest rates move lower as well. I guess they're looking at that core or the headline number coming down. The core, came in a little bit expected in the year-on-year, falling to the downside. Got to see that service sector costs come down as well, but we'll see how that all plays out. The dollar is moving higher, but mostly because of the dollar versus yen. It's also moving higher against some of the other currency pairs as well. So let's take a look at the euro versus US dollar as I promised. And you can see in the chart here that the price came down. This trend line, line goes all the way back to here, and then in trading here to here today, the price came down to that trend line, found support. Buyers, after breaking below the 200-hour moving average, that's this green line right here. The rebound back to the upside did get a little bit above that level, but stayed below this swing area, keeping the sellers kind of content and happy. And so the selling returned and forced the market a little bit to the downside, with one final test of the 200-hour moving average here before the market moved to the downside and broke below that trend line. However, the market could not really sustain much momentum below this level right through here. That was the low price from Tuesday, or actually the low price for the week from going back to Tuesday. And so we are seeing a little bit of a rebound back to the upside, back toward the underside of that broken trend line right through here. So we'll watch that level, this level, and also the 200-hour moving average. But with the price below the 200-hour moving average, there's hope, I guess, that the sellers can push the price lower or tilt the bias more to the downside here for the euro versus US dollar. We did see German CPI come out weaker than expected here, and the GDP was also a little bit on the light side in Europe today as well. So that's helping to push the pair to the downside and keep that bias moving in that direction. So, but we'll watch this level. If the market is able to stay below those levels, the sellers still remain in play. Got to get below the low price from Tuesday and also near today to push the price down toward the 109.43 level to the 109.25 level. Of interest here at the 109.43 level, if you go to the daily chart and you look at the range going all the way back to this high right here, this is the 2020 high to the low that we saw in 2022. The 50% retracement, 109.42. So going back to our hourly chart, 109.43 is this top side of this swing area that I have marked out through here. That's this area right here. So if we get down to that 109.42 level over time, then that would keep an eye on that. That would be an interesting level to see if the market can get below that level on further weakness. Let's take a look at the dollar versus yen next. A big sharp move to the upside. Bank of Japan met first meeting for Ueda, and that he kept policy unchanged. Said they would review the policy framework, and that would take a while. But and he also implied, I guess, that the rates would stay unchanged. So the market sold the yen on that news. So a big, huge move to the upside. He later came out and tried to say that, well, we could still change policy in between our review here. And so he tried to backtrack a little bit to kind of slow the rise in the dollar versus yen, the decline in the yen. Yen is going down versus all the major currency pairs in trading here today. You can see on the daily chart what's happening here. We are moving closer to the 38.2% retracement of the move down from this this high to this low. That level comes in at 136.65. Also up ahead is the 200-day moving average of 137 even, which would be a key level going back in the month of March. The market did move above that level, but could not sustain momentum and close below levels. I haven't had a close above the 200-day moving average, as a matter of fact, until going all the way back to December 19, 2022. Moved above it, but didn't close above it, and then moved lower, moved down here. So those are the targets on the top side, but we are seeing the dollar yen come off a little bit. Yeah, again, rates are down in the U.S. The 2-year is down about 7 basis points, it looks like. Currently at the moment, the 10-year yield is down around 9 basis points. So we are seeing that start to weigh a little bit on the dollar versus yen after the sharp move up on the Bank of Japan. Let's take a look at the sterling versus US dollar. Seeing again choppy action. If you recall from yesterday, the price was really choppy. It moved to the downside, sharp move to the upside, sharp move to the downside, sharp move to the upside, closed near the highs and near this old swing area. But that old swing area is getting extended right here, right here, right here, and right here, as you can see. But each of the time the market goes above this swing area, which goes back to the, it's just a level that we had ceilings through here and then floors through here before it rotated to the downside. Again, we came above it here, came above it here, came above it here, came above it here, but but we also had levels after it where the market started to use that level as a resistance again. So I'm going to keep that level in play, but you can see we're still trying to move above it, and we have to stay above it in order to give the buyers the go ahead to push to the upside. So an easy trade for traders is to just use this level as your risk defining level now. If you're bullish on the sterling versus US dollar, bearish on the US dollar, as long as the price remains above the 134.95 level, well, things are good. If it moves back below that level, back to the drawing board. So there you have it, a look at some of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.